2022 has been anything but a stock picker's market. Everything has seemed to have gone down, but we've seen a change. We've seen a change over the last few weeks where stocks are reporting bad news and they're not going down anymore. We're seeing a rally. We're seeing sectors do well, but certain stocks within the sector, Apple, outshine the rest of the technology sector. So I think the theme going forward in the second half, and it's cliche, it's a stock picker's market. Yes, it's always a stock picker's market, but you're going to see individual names outperform within sectors that may be doing just okay. And you're going to look for the best and the brightest stars, whether it's in the chip sector, the tech sector, the communication sector. There are going to be stocks, and I'll go to defense sector. You're seeing stocks like Northrop Grumman making new highs. Other stocks, they're trying to catch up. But the biggest names, the best performing names in the sectors, those are going to really shine over the second half of the year.
Oh, absolutely. This is a stock picker's market for sure. I always think every market is a stock picker's market, but obviously in big bullish trends, it's a very forgiving market, so you could pick a stock, see it go against you, and then turn around because the whole market's going up. But this year, as we know, there are really two markets. There have been the energy markets and the stocks that have done very, very well because of the macro trend being more towards the energy crisis. And then there have been other stocks that have done very poorly. So for example, if we look at something making a new 52-week high, like CF Industries, which is related to energy, that's one thing. It understands that between inflation and drought and geopolitics, that has been a good stock to pick to be long. On the flip side, with consumer discretion being under a lot of pressure this year, whether we get bounces in it or not, you have a company like Abercrombie & Fitch, which really doesn't sell anything that you absolutely need. It's much more of a specialty type shop. That would have been a great stock picker's choice to go short, as this just made new 52-week lows. So when I say stock picker's market, really basically, again, going back to everything else I just said, you make those decisions based on the overall macro, but you also make the decisions based on the tools, the chart setup, the risk reward, and then you can have a focus on specific stocks that follow that trend and know right away if they're not.
There are certainly risks inherent in the markets going into year end. And first up for now, the Federal Reserve's path to reducing highly elevated inflation is still unsure. There's a lot of data that needs to be digested. We are at a point where inflation appears to have peaked, but only one or two reports. We need more evidence. And once we have that evidence, it will help calm the markets and really give us a sense that a bottom has been put in, and one where you can put all of your money to work with confidence.
The biggest risk for equities through year-end 2022 definitely is inflation. People think that inflation may have peaked. I look at it more as it has plateaued. Certainly there are scenarios that we absolutely can't control. One is that Europe, for example, had the worst drought it's had in 500 years. China, the Yangtze Sea, is actually dried up on its banks, making hydropower very difficult, not to mention the ability for ships to get in and out very difficult. These are all going to continue to affect the market. That and geopolitics, of course. All of this has turned out to be not only super inflationary, but it also is a very difficult environment for, let's say, central banks to control, because you can raise rates for demand destruction to bring things down in price to a degree, things that we don't necessarily need that much. But you can never deny that everybody needs fuel and everybody needs food. And those are two things right now that Mother Nature has really taken her own turn on. And so that's why I don't think that inflation is anywhere near over. And I think the winter is going to be a really tough one, particularly for people who are short oil and energy.
All right, everyone, hello and welcome to our stock picking lightning round. We have three panelists lined up for you today for the stock picking lightning round. It is going to be a ton of fun. I am so happy that I'm getting to host this one because this is actually based on one of my favorite Stock Charts TV shows that we do. If you're familiar with the format of a show called The Pitch, then this show is going to be a little familiar to you. So we're going to have a lot of fun today. The format of the show, if you're not familiar with it, we've asked our 3 panelists to each bring 5 charts to the table, 5 actionable ideas, charts that caught their eye, trades that caught their eye, setups that they are kind of looking at for the current climate. We're going to run through each of those ideas with them. We're going to go through in 5 different rounds, so one at a time. It's going to be a lightning-paced, a lot of fun kind of panel. I'm really looking forward to this one. So with me, before we get into it, I want to introduce everyone very quickly. We've got Jay Woods of Drive Wealth. We've got Mish Schneider of Market Gauge, and we have Mary Ellen McGonagle of Simpler Trading. Thank you all for being here. It is a thrill to be with you in person. We've done this show a couple of times with all of you, in the little Zoom bubbles, but it's fun to be in person here. I think we're going to have a lot of fun today. And I just got to say, we have brought the 3 of you into this panel because on top of being great technicians, great market analysts, all 3 of you are really great individual name pickers, great stock pickers, great fund pickers. So I think we're going to have a lot of fun today. You guys having fun so far? Looking forward to it?
Great to be here, and interesting period in the markets. We'll see what we can take
That's
out
true.
of it. Yeah.
We have quite a fascinating day, quite a fascinating climate here to be hosting ChartCon, but we're going to waste no time. We're going to dive right into it. So, like we said, we're going to go, one chart at a time through each of you. You're actually sitting in the order that we're going to go in. So, Jay, you are going to be first.
On the hot seat.
You've got 2 charts with us today, starting with XLU. What are you seeing here? We've got a shorter term and then a longer term, right?
Well, as we all know, we're in a bear market, and one of the things that tends to shine in a bear market is utilities, and a lot of people are averse to risk. So, where's a good place to hide utilities? So I look at the XLU, which is the Spider Select ETF that tracks you the utility average. It has a 2.8% dividend yield, so that's nice in itself. And then let's look at it. This is the daily on a year. We are now testing a nice long-term uptrend, and we're going to spread that uptrend out in a little bit. And I just wanted to show on the RSI level, we went to an oversold condition. Last time we did that, we had a little bit of a bounce. We tried to have a bounce, and then today, of course, Grayson makes us put these picks in 3 days ago. No, I'm joking, but we still like it over the long term. And now let's look at the long term.
Sure.
Let's zoom out because the utilities aren't something you trade intraday. These are not your fund stocks. These are your safe stocks in a tricky environment. Well, if you remember channeling stocks.com, this is the dream child for the channels that it's been. Every time it's gotten to the upper band overextended, which it did recently, just 2 months ago, it's pulled back, and now we're at that lower end.
Yep.
Now, it's testing it again. Could it fail? Yes, but let's see what happens historically when it fails. We had it happen during COVID. We had it happen at the end of 2018 when stocks sold off as well. But it tends to find its way back into that up channel. So over time, if you're looking for a safe, reliable bet, I think the XLU is the way to go.
This is a really interesting one for the current market. I mean, obviously being hit so hard, but I love the long-term view here. I love that you're bringing in multiple time frames. So, Jay, thank you. XLU, your first pick of the day. Mish, we're going to go over to you. We're actually going to jump over to ACP now. You've got your first stock up. Palantir, what are you seeing here for PLTR?
Well, from a fundamental standpoint, first of all, you can see that it sort of peaked in May and even before the June low. And so it actually started to outperform the market back then when everything else was making a low in June, and this was already establishing some form of a base. Now, we've tested that area, as you can see, going forward several times. But the company itself is interesting. It was obviously trading at much, much higher levels at one point, up around $120 or so.
Right.
But now at these levels here, above $8. It's interesting because they have gotten a lot of money from the government lately. They just got a $59.1 million contract with the U.S. Army. They do big data. And so if you're looking for something that actually is not necessarily relying on speculative interest alone, but the government, which we assume is going to continue to operate, then this might be a good one. From a technical standpoint, what you can see, if you look at the leadership indicator right there, It is slightly outperforming the SPY. That would be indicated by the red line there. So it is an outperformer. If you look at the one underneath, that's the real motion. That's the momentum indicator. So clearly we're running into a little bit of resistance up at that top Bollinger Band, but it has cleared the 50 and the 200-day moving averages on the momentum, which are also in a bullish cross. Back to the price chart, it has stopped exactly at the 50-day moving average, which is the blue line. But if it can continue to consolidate and the market can stabilize at around these levels, then this would probably be a good reason to see this at 11-ish.
Yeah. I mean, seeing some of these names finally putting in potentially a higher low, is really, really interesting to see. I mean, they have seen quite the fall, so a bit of a bounce here. I like what you're seeing on this chart, Mish. Mary Ellen,
yes.
We're going to jump back over to the Sharp Charts world, and we are going with your first pick of the day, which is going to be ALB. What are you seeing here?
Yes, so ALB is all about the electrification of vehicles. We had Biden recently passed the IRA bill, the largest clean energy bill, and a lot of mandates out there. The state of California is mandating electrical vehicle sales only coming up here. And so this particular company provides one of the key components to the electrification of vehicles, and that is lithium, also known as white gold. And it is supply demand. That's what this is all about.
Yeah.
There's an awful lot of demand. Ford came out with numbers recently. Their electrical truck sales were super high. So the demand is really there. Tesla also is talking about producing lithium on their own. So this particular company, as I stated, does provide lithium to these companies. So now we can take a look at the chart. It is suffering a bit today with the markets. However, still standing firm at that red 50-day simple moving average. Also, I like to use a lot in the way of history. The stock has been able to undercut that 50 and then recover. Ideally, what I would like to see is that MACD have that positive crossover, that black line. If we could get that up through the red, that's going to indicate that we are in an uptrend. And you can see here, historically, this stock has been able to perform in an otherwise difficult environment.
Absolutely.
So, and also ideally that RSI, get that dipping upward, but overall it's holding in quite well.
Yeah. I mean, in a market like this, sideways is the new up. So this is a strong chart in my book.
Yeah.
Okay, Mary Ellen, thank you for your first round pick there with ALB. That takes us through round one. We're going to jump into round two. Jay, we're going back to you. Your next chart is going to be Intel, is that right?
Yeah, this is one that you don't see many people picking. And if you look at the chart, it's a dog with fleas. But these fleas are getting me to itch a little bit. And I think we've seen some of the biggest, can I say puke? We've kind of started to puke out here. And the story for this chart is funny. My intern is a big fan of the product, but he's all fundamentals. And in a bear market, everyone is a technician. And all of a sudden he kept coming over to me, Mr. Woods, what do you think of the chart here? What do you think of the chart? Because I bought it at 50, I bought it at 40, I bought it at 30. Now I'm looking at it, I'm like, okay, now it's getting interesting.
Yeah.
So what I like to do, see how overextended it is to the downside. We saw a little positive. We saw a little MACD crossover. The histogram went positive. This is something where, from a day trading point of view, you had a buying opportunity. Doesn't look like it's holding right now. The RSI tremendously oversold. Now let's back this out. Let's look at a longer term chart of this and say, all right, have we seen this before? Well, we're going way back in time. Yeah, this is historic. This is a big overshoot to the downside. We're coming into historical levels of support where I would start to nibble. That's why I said you got that itch. You may want to start to build a position here because one, you can have a mean reversion, and when you're in a downtrend and so far below the 200-day and the 50-day moving average, the biggest rallies are always under the 200-day. Catching a falling knife is something I don't recommend, but if you were to ease into a position here at these levels, I think you'll be rewarded over the long term. Hence, I picked Intel.
Okay. I love that analysis. I mean, I love you bringing in these multiple time frames, and especially on a historic company, really, like Intel, going all the way back.
I'll give you one more. If it gets kicked out of the Dow, like ExxonMobil, it could be to the moon. So we'll see. That's the chatter.
Yeah, we're going to see a flip of that story.
Yep.
I like it. Intel, Jay, your second pick. Mish, we're going to go back to you. We're going back to ACP. We are going to go to your next chart, which is KGC, Kinross Gold Corp. What are you seeing here for KGC?
Well, this is really part of my macro vision of the fact that raw materials have been obviously performing very well, but actually the gold miners and the silver miners have been really well underperforming until recently. And once again, this is a Canadian company. They mine both silver and gold. And from a technical standpoint, you can see that it's been outperforming. In fact, a week ago, Friday, when we had the big crash in the market, this actually was rising along with gold miners GDX. And so it's showing you now that there's some interest coming in. Once again, if we look first at the leadership, it's also well outperforming the SPY, although coming down a little bit, obviously, with market conditions. And the momentum cleared both of the moving averages, although, like I showed you with Palantir, where the 50 was over the 200, here the 50 is under the 200. So momentum isn't quite as strong as I'd like to see it. As far as price, we've well cleared the 50-day moving average, and the slope of that blue line is up. And we kind of got a really nice breakout once we took out about 350, 360, and that's really the level now you want to see hold. And I would look at this more as a potential long-term play, maybe. This also was trading much, much higher at one point. At least maybe a double on this one.
Okay. Interesting. I mean, holding up so well last week, that is definitely catches my eye. By the way, I want to mention to everyone, if you're watching at home and you're wondering what these indicators are, these are part of the market gauge plugins for ACP. So you can actually install these indicators directly into your own stock charts experience, sort of take advantage of tools that Mish has helped build herself, really kind of make her process your own. So part of our little ACP plug there, we got these plugins. It's very interesting. So thank you for bringing us through round two there, Mish. Mary Ellen, we're going to go back to you. Your next chart is going to be CF Industries. What are you seeing here on this one?
Oh, yes. So CF Industries is a fertilizer stock, and this is another supply-demand issue. Demand is quite high due to certainly disruptions between Russia and Ukraine and elsewhere. There were issues with transportation and delivery going back. So fertilizer prices are at a high, and they continue to remain pressured. And there are about 12 fertilizer companies out there. Of those, only 8 are investment grade. Of those, you really want to focus on the companies that are using the excess cash flow from this increase in fertilizer prices, that these companies are reducing their debt. So CF does qualify for that. They also have very, very strong triple-digit earnings growth for this year, and the stock is really holding in remarkably well. It had a pullback to that 200-day simple moving average, has now moved up back above each of those moving averages, really allowing it that freedom to trade higher. I'm on the lookout for a move back up to that 120 level, ideally a nice base breakout. And take a look at the momentum indicators. RSI is trending upward, and that MACD just had that black line up through the red, poised to turn positive. So I think the chart looks great, and the story is good as well, fundamentally.
I totally agree with you. I love this chart as well. This has been a space that's been on my watch list for a while. That materials, chemicals has just been a really hot space this year. So it's a great chart, Mary Ellen. I love that. Jay, you're bringing us into round 3. Here we go. What's your next chart? It is United Health, UNH.
United Health.
You got another multi-time frame look here for us.
Well, yeah, I think it's important. I mean, I didn't have to draw a trend line under this because the uptrend is clearly the 200-day moving average. It's flirted with it a few times. It's consolidating. And right now, in this environment, healthcare is one of those sectors that people tend to flock to, and then you go through the sectors, and United Healthcare, to me, is the one standout. Not only is it the biggest weighted stock because it's a price-weighted average of the Dow,
right,
but it is coming into an interesting inflection point. It continues to make a series of higher highs. You could say it has a double top, but it's made higher lows. So it looks like we want to test that level again at the 550 area. And then let's break it down. Let's go back further in time. I think we have one more chart on you, Annie?
We do.
All right. Well, this is actually not further in time.
This is not.
We reversed that. I apologize.
You reversed them.
That's all right. It's all right. Looking, so further in time, it looks like we have that ascending triangle. And if we can break above that 550 level, I think we'll be all right. And now to back it up, let's go. Let's
we'll zero
for the
in a
shorter term trader. We have recently seen it rally above its downtrend. Unfortunately, today it has failed that. So we want to continue to monitor the 200-day moving average. That, to me, is the area. The one positive I see, that's at the RSI at the top. It had, as we were trending lower over the last month or so, there was a nice bullish divergence. So to me, that tells me, all right, relative to the rest of the group, relative to the rest of the market, this is a space you want to be in. So if we can hold that 200-day moving average, I think UNH will run to 550, test that upper band again, and if healthcare acts as strong as I think it will, November, December seasonally, we could have a breakout by the end of the year.
I love this chart. I love that long-term uptrend especially. I mean, it's kind of like, what you were talking about with utilities as well, but this is interesting too, coming back down kind of to 500, holding that a little bit. Today, we're still staying above that. This is an interesting chart, Jay. I like it. Well, we reversed it on you, so thanks for being flexible there.
We pivot. It's what we do here on live television in person. It's well, yeah, the Fed doesn't pivot, but that's a conversation for another time.
All right, Mish, we're jumping back over to you. We're in ACP again. You've got a really interesting name here, Rivian. This is an interesting chart. Tell us what you're seeing here.
Well, Mary Ellen pointed out about the EV space.
That's true.
And so there's a little bit of consumer instinct, a little bit of macro, and then some technical to talk about. Obviously, you can see this has not been impervious to today's down move in the market. But from a fundamental standpoint, as Mary Ellen pointed out, EVs are hot. They're going to get hotter. From a consumer sentiment standpoint, I live in Santa Fe, where you see a lot of Teslas. Now you're starting to see more and more Rivians.
Yeah.
I've talked to people who have orders going out a year for their new SUV. I've heard great things about it. They have service vehicles that come and literally will fix your car on the spot or take it away and bring it back to you. I've heard there's some kind of issues, though, with the first round of Rivians, but hopefully that'll get fixed. It's a sexy car. It was voted top car, one of the car magazines. So that's all the reasons why I like the car and I like the stock. From a technical standpoint, I was a little disappointed today to see that it broke back down under that 50-day moving average, as you can see. But again, gravity takes over when you have a big downdraft in the market. And of course, if we are going into a recession, then you wonder how many people are going to spend. The median price for this car is about $66,000, $67,000. Not enough information, interestingly enough, on momentum because it's a relatively new issue.
Yep.
But you can also see in the leadership, it is also outperforming the SPY. And what I like is that the biggest volume spikes that we've had have been on the up days. So essentially, we've been in and out of this stock like a couple of times. We caught that little move at the early September, and then we got out. We bought it again last week, and actually we scratched on it today. I mean, that's how tight we're playing stocks like this. But if we can get back over that, well, really 38, 39, 40, analysts upgrade to about 60. Not that I take a lot of stock in analyst stuff, but whatever. And I do think that this would be something to keep an eye on. You can see there's a nice sort of double top there.
Yeah.
And that's at around the 40, 41 level. So that would also be a really good place to get long if you didn't want to get into the noise right now.
I like this chart. I mean, still hanging on to that kind of shorter term uptrend off the May lows as well. I mean, that makes a ton of sense. Like you're saying, pointed at those two tops if you could break above that level. That's a great chart. All right. We are back into the end of round 3 here with Mary Ellen. We're going to jump over to your third pick, which was Fluor. What are you seeing here on FLR?
Yeah, let's take a look at Fluor. It's had a fantastic week. Actually, over the last 7 trading days, they've announced 3 new contracts that they've been awarded.
Wow.
U.S. Naval, a big infrastructure project in China, and also a project in Scandinavia.
Okay.
And the really common thread there is that they are government-funded projects. And when you talk about a recession, contraction in the economy, the government purses still remain open. And the other fact about these awards is that they are going to be booked into Q3 earnings. That's why all the excitement. You can see the big earnings, gap up, continuation trade. It's really holding in well today. And this is another name. I'm looking for a nice base breakout around that 28, 29 level.
Okay.
But really like that high volume on the gains this week. MACD had that nice positive crossover. It's in positive territory. And then likewise with that RSI, we could get into that overbought position. However, if you go back to earlier this year, it's been able to continue to retain its upside price action, even if it is overbought. So
Definitely. I love this chart as well. I like all the things you guys are bringing today. Of course, I mean, you're great stock pickers. That's why we put you on this panel. But this is a great one. I like the action here on FLR, Mary Ellen. Jay, round 4.
All right, here's one you won't like. This one you won't like.
What is this?
Right?
What does this company do?
You cannot say you like it. This is Netflix. Netflix is a stock that you want to look at from a risk-reward point of view. We should do a show on risk-reward. In fact,
we should.
In fact, we're doing one tomorrow, so I'm trying to give them a little plug. But I know we're short on time. So Netflix has been gapping down and staying down, and something has changed. We finally look like we put in a bottom. And I will put the fundamental thesis behind it. If you look at the first gap all the way to the left-hand side of the screen, that was an earnings miss. It gapped lower. It tried to rally. It failed. It traded at its low until the next earnings came out. It missed again. It traded lower. Thank you for that great
animated actions here.
Yes.
This is amazing.
And it traded lower on earnings. It found the low. Last quarter, it rallied right there, on earnings, and it got back to where? The gap from 2 quarters ago. So we see distinctive gaps and now higher lows going into October 18th's earnings. So if this is a stock that is going to finally turn it around, this is probably the time to do it. The technicals are set up for a nice relief rally. Fill the gap. But if we don't fill the gap, we're going to test the 200-day moving average. So break above 250, we're going to 295, 299. And then if we can fill that gap, that's 330. So the upside potential versus the downside risk is definitely in someone's favor. But when they report, use stops wisely, be careful, be on top of this trade. But it is set up for a nice little pop here.
Yeah. This is such an interesting chart. Obviously, growth has been hit so hard in the last year, but this is kind of one of those small component, fairly big components, but components of that growth story that's actually finally starting to move higher a little bit. I love what you're pointing out here.
You weren't supposed to love it.
Well, I was going to hate that one. Okay. So you're saying that Netflix would be one to watch here?
One to watch very carefully. This is a stock you have to be on top of, because if it breaks down, we've got a downside of 175. That's a nice percentage hit. So you really have to be on top of it with stops.
I like it.
We'll talk about it more tomorrow.
We will. There's a little pun built into there, too. Netflix one to watch. I like it.
Yeah, all right. There you go.
All right. Mish, we're going back over to you for round 4. You've got our first ETF of the day, GLD. No, that's not true. We had
Sell you, yes.
You know. Our second ETF of the day here in round 4.
Probably the thing when I talk about maybe the most controversial, because it has so many different personalities. Mm-hmm. It is interest rate sensitive. So with the Fed tightening, obviously that has been a huge impact on why we've seen this downtrend. However, if you look at 2022, it still has well outperformed the indices, particularly the SPY. From a macro standpoint, the reason why it intrigues me is that A, it's completely undervalued when you go back and look at it from like 1980, where the Dow was versus where the gold is.
Sure.
It has been heavily manipulated. In fact, that whole dollar buying with gold selling was sort of the reverse of what happened in Bretton Woods, and that didn't go well down the road. And so also, if we really do get into more of a chaotic situation, which we hope, of course we don't, but considering we have global issues, food fighting, hoarding, geopolitics, a midterm election, definitely division in this country, and the whole credibility of central banks at stake right now, I know from back in the day that people flock to gold. It still has value as the hedge against everything. And so now if we look at the chart, you can see once again we had a nice actual V bottom, and once again tested the 50-day moving average a couple of days ago, but with the market coming off with the fear of rates. But if it does not break down from here and takes out that 50-day moving average, then I think that it kind of stopped at around 1740 if you look at it per ounce. Gets to 1740, I don't see any reason why it would stop at 18 or even higher, and again, especially if things get more chaotic.
All right. I like this chart. I mean, I love the logic that you're walking through too, going a little bit beyond the charts on that one. I think that makes a ton of sense. That's a great pick here, Mish. Thank you for walking us through the thinking behind the selection there. Mary Ellen, back to you. Round 4. You're closing us out here in round 4. You have got PCTY, Paylocity Holdings.
Yes, it is getting a little bit of a haircut today. It is a computer software, cloud-based software company, but it's in a really unique spot. There are 380 publicly traded software companies. Of those, only 15% are trading above their 50-day simple moving average. Most of them are smaller companies, but this particular PCTY is in a niche spot in the sense that they provide software for human resources and human capital, really. And we're in a situation now, we did get employment numbers today that were strong, but there are issues with employee retention and really keeping employees happy. So this particular company is all about that. It's providing ease of use for the employees of these particular companies and helping with retention and also productivity. And that's what, of course, corporations want. So if we look at the chart, we can see that the stock until today was poised to have a nice base breakout, nice 2-month base breakout at about 270. I'm going to need to see the stock hold there. We can see that it historically can undercut that red 50-day simple moving average and recover. Take a look at the volume characteristics on those up days this week as it was forming the right side of that base. We had that nice MACD crossover into positive territory. RSI is positive, so I still like the stock. We want to see on these down days the volume to dry up relative to the recent history on the upside, but it's a solid earnings outlook as well.
Absolutely. I love charts like this that have such a good levels to trade against, really. I mean, you've got that clear level kind of up at the 275, 270, like you're saying.
Yep.
That just makes these things really easy to think about, and I love that selection. Okay, Mary Ellen, PCTY, that is your 4th round pick. We're going into our final round here. We're actually doing pretty well on time, so we don't have to speed through too much, which is good. That's always the challenge with these things. Jay, you've got another 2-chart look here.
I do, and they both look
Vertex.
good. So
there you go.
The second chart will just put the exclamation
Really
point on why I'm watching this one. So Vertex, it's a biotech company out of Boston. Cystic fibrosis is the drug, one of 3 that they're working on. So that's the fundamental story behind it. Usually I don't know what the stocks do until I look them up on the chart, this one included. But Vertex has been trading very, very tight lately, and it's at one of those thresholds where you think that if it can hold above this level around 295, that something has changed and we're about to take that next leg higher. Now, the reason, just this chart in itself sets up your risk reward, and I think this is a spot you want to be in above 295. But let's look where it's coming from, some of the history. Now, if you go to that second chart,
let's jump over there.
Let's go 3 years.
3-year chart.
All right. Wow, we have a nice rounded bottom here. And as my friend J.C. Perret says, he loves rounded bottoms. It's his quotes, not mine. And we have, if you're into your teacup and your saucer, you have what is a nice little formation there on the right end of the chart where we may look like we can take that next leg higher. In biotech, it's kind of tricky. One big announcement and you're going to, either go up 10, 20% or down 10, 20%. But the price action right now is telling me something good is happening or something good is about to happen. And if we can break that 305 level and hold above it, we have a lot of room to run. Even though it's coming off a tremendous run of its own, Going back in time, to put it in perspective, we've been at this level before 3 years ago. We failed to break above it. If we can get above, stay above, I think this stock could go up 25, 30% very easily.
This is a great chart. I mean, again, levels to trade against, the double top on Rivian, PCTY with the new highs we're seeing. I mean, this is another great example, zooming out even kind of a broader couple of years. I love this chart. Thank you for walking us through it, Jay. Really quick question for you. Biotech is kind of another space that we've seen actually a little bit of strength coming into. Yeah. Does that factor into your thinking here on Vertex? Or are you looking kind of further up?
Well, biotech is an industry that I follow closely because it's been a lagger. It was one of the first to get hit back in February of 2021. And you can see it in this chart. This stock has been beaten down.
Yeah.
I think the poster child for that is Biogen. Now, Biogen had been beaten down and had based. In fact, it was my pick on our stock draft. I think I'm winning that just based on Biogen.
No, we changed the criteria. You're losing.
All right. But in this space, there are a lot of bases that are starting to form. This one has the nice rounded bottom. So it sets up the risk reward, and that's what it's all about in the trading. If this, then that. I will never come on your show and say, all right, it broke out, it's going here. No, okay, now it broke out. Now you have a floor to which you want to adjust your management. And risk management is the key. And if I can, 5% downside to a 25, 30% upside, I'll play in this stock if that's the case. And that's why I took this one. So.
Okay, I like that explanation. Mish, we're back to you for your fifth round pick, which is going to be Bitcoin. This is an interesting one to bring into the conversation here. I like
if you thought gold was controversial, this is the granddaddy of controversy. But before I just want to tell Jay that Vertex, we have quant models that are all TSI, trend strength indicator based, and that's our NASDAQ All-Star we've been in. So from that standpoint, it's a great pick. Okay. Anyway, getting back. So. There's definitely going to be, I think, the moment of truth for the cryptocurrency space, particularly Bitcoin. It has survived essentially every single controversy that has come out about it, whether it's banned from countries or, there's all kinds of problems with Kim Kardashian, Coinbase, you name it, there's been problems everywhere. Sure. And yet, Bitcoin, at least I haven't looked at it in the last couple hours, but it's hovering between that 18 and 20,000 level. And I think it's also well outperformed the market as a result. So if it can hang in there, you see that around 1150, there's a lot of support. In terms of the leadership indicator, it's on par in terms of performance with the SPY right now. Again, not enough information really to give you a lot of feel into the momentum chart.
Sure.
But getting back to price, it's holding over a Bollinger Band. If it can continue to consolidate and hold over, like I said, I think 1150 might be your max. We're looking for it to really hold more like around 1190 right now.
Okay.
It got up a couple of times to 1250 and having some pressure with the market. Gets through 1250. Seasonally, it could be great for Bitcoin, and getting back to my credibility of the central bank potential falling apart, I think people will start to look at cryptocurrency as a good alternative. The whole reason for DeFi to begin with.
Yeah. I think this is a great opportunity to ask as well. Bitcoin played through an ETF versus directly through something like Coinbase. What factors into your decision there to bring?
Mostly our members who do not have wallets. Although we do have a quant model crypto pulse that trades the cryptos, but I wanted to put something in that had a lot less volatility with, again, to Jay's point, good risk reward.
Yeah, makes sense. I love this chart. Thank you for bringing something interesting to the table there, like Bitcoin on top of gold. You really brought it all today. That's great. Mary Ellen?
Did your purse.
Round 5. We are wrapping up with you.
Yes.
Your fifth pick.
Drum roll, please.
Regeneron.
Here we are. This is another biotech stock. And so we are looking at Regeneron. They had that huge gap up in early September due to positive readings on their drug for diabetes-related eyesight problems. And we can see that it's really retained that upside even after having such a huge gap up and being in a difficult period here with the markets. Now, I did also want to circle back to Vertex as well,
Sure.
and some other companies, because in looking at this current market environment, you can look at history as your guide. So I did do quite a bit of work taking a look at the 2008 market, a huge recessionary period, and two stocks, the S&P 500 was down 34.5. There were 10 stocks that, and among others, that really did well. Vertex was one of them. Amgen was the other. They were up about 25%. And the reason there is because these companies are providing needed drugs, and they are coming out with new products, innovative. So that is another reason with the talk of a possible recession.
Sure.
I would look to potential outperformance in some of these more innovative biotech names.
Interesting. I love this chart. Again, I mean, you are bringing some beautiful charts here today, Mary Ellen, and you know, another one that's got such clear levels to trade against. I really like the way this thing is moving.
Perfect.
You know, again, sideways is strong in this market. It's wild. Same kind of question for you. I mean, you kind of touched on this a little bit, but how important is the sector and the industry kind of thinking to your selection in something like Regeneron? Are you looking kind of further up at biotech as an industry group? Does that
again,
factor
going
in?
back to historical precedents and seeing that it has been able to buck any downtrend going on elsewhere.
Yeah.
A lot of my work is very centered around the industry group and sector performance.
Okay.
Studies have shown that your price appreciation or deterioration, almost 50% of that price movement is attributable to the industry group and sector that it's a part of. So very critical part to my work.
Well, that brings us to the end of our 5 rounds. Thank you all for sharing such amazing thoughts, amazing charts here, and really kind of walking us through. You're not just saying, you know, this is my pick and you can figure out why, but you're actually really diving in, and that's what this whole event is really all about. So thank you all for going into such detail. You know, I really do want to ask you kind of individually about your process for finding these things. I think that's an important component. So, Mary Ellen, maybe we can start with you. We'll kind of go in reverse order here. What is your process for finding these 5 names? Is it kind of more bottom-up stock picking? You're finding individual charts from scans, or are you coming from the market
I
down?
am every single day constantly screening the markets. I enjoy it tremendously. I view it as a treasure hunt. And from my work, my process at this point in time is entirely different than if we were in a standardized bullish phase. Mm-hmm. In that period, I would go directly to the outperforming industry groups. From there, look at the top candidates based on fundamentals. We're just not there. So it's going to be a little more eclectic, and really the stock selection is going to be, I've shown a number of names where it is supply-demand driven. The stock has a history of outperforming in otherwise dire market periods. So a lot of the same factors as it relates to strong fundamentals, but just a little bit different in the backdrop.
Yeah, absolutely. I mean, it is quite the environment to be picking stocks in. So
it is, yeah.
Mish, what about you? What's your process for kind of finding these names? I know you obviously brought things from different corners of the market, which is so fascinating. So how are you going about selecting these 5 when we give you that challenge?
Well, partly, obviously, I have to refer to the macro environment and the fact that we are at a time we've never seen before, because for the last 40 years, we really had a very accommodative Fed, and now that has changed. But I also have an economic modern family, which I like to use the Russell 2000 as my granddaddy, because that's all stocks that are manufactured within the U.S. And then and retail, which would be the consumer discretionary. And then along with biotech, actually, is one of the characters in my modern family, because it's a cyclical and a non-cyclical, as you guys just so well pointed out.
Sure.
In bad times, it can still do very well as a non-cyclical. Obviously, in good times, it can do even better. And then there's semiconductors and transportation, which really measures the demand side of the U.S. economy, wrapped up with regional banks. So I look at all of those, how they're working, either disparate from each other or in sync with each other. And then I go through the stocks with phases, the moving averages, where they are, obviously our ACP plugins to look at leadership and momentum indicators. And then finally, I think the most important, I'm so glad you're going to talk about this tomorrow, Jay, is the risk reward, especially in a declining market. It's all about the risk reward.
It is. that kind of top-down approach, I really like you highlighting that, how you're thinking about that, bringing in some of those macro concepts as well. That's fascinating to hear. That's why we do a panel like this, because we get to hear so many different approaches. Jay, when I think about your history in this business, obviously being on the floor, how has that influenced you as a stock picker?
Well,
how are you going about finding these names?
I've pulled away from the minute by minute, second by second chart, and trying to make those quick plays to looking at from more of a top-down approach. So new highs, new lows, the first thing I look at, and I like to be a trend follower and buy off of strength. And it's funny, we talked about this in the pre-show. The stocks that look best to me are in the energy sector, but I didn't bring you one energy sector. I tried to be a little different given the environment that we're in. Try to say, all right, this stock is beaten down. These are the questions I get more than anything. When's it going to stop? Where would I get involved? So I'll look back in time to historic levels, to historic events, and say, all right, this is where I want to nibble. I'm not going to go all in on a stock that's a falling knife, if you will, but there is a setup. If you catch it right and you average into it, you're going to be rewarded for it. So this environment has changed how I look at it, but it's always top down, new highs, new lows, then I go sector approach as always. And then you have on your board, energy sector, the only sector up again today. It's the only sector up for the year. Is that a year or is that today?
Because this is today.
Now hit a year and it's going to be the exact same thing, except real estate's going to be on the bottom there with technology and communications. So you want to buy strength. But I think the theme going forward when we do these year-end shows will be it's a stock picker's market, which is so cliche, but there are stocks that stand out in individual sectors, and you really need people like this that do that research. Your platform has a lot of great people that share charts, and you can see what they're following. So I don't just do it myself. I go to the community, and I see what other people follow. I listen to people like this. And then I do my own research just to verify it. I don't take anyone for their word unless I, do the work myself. But it's always top down. And now more than ever, I think we really have to do the work to find that risk reward setup that's going to be beneficial for you.
Yeah, that makes sense. When I hear stock pickers market, what I really hear is
cliche.
What you guys are all referencing. It's a risk management market. That's really what that means at its core. It's not just kind of a buy everything and watch it ride.
Those are good markets, though.
Those are fun markets.
We had that
like
during
those.
the COVID days.
Yeah, we got kind of lulled into thinking that was the new normal, right?
Yeah, I'm probably going to talk about this more later today, but just that whole impact with interest rates rising and the U.S. dollar. So there's other metrics that are really highly impactful right now.
It's been a big shift for us all.
Yeah.
Something we haven't seen in years. Anything in our final couple minutes, anything that stands out to you when you think back of things that you could have picked, almost picked, wanted to pick, anything stand out to you? We talked about energy, for instance.
I think we all agree that energy right now is the strongest sector, and we're taking another leg higher as we speak in a down market. It's not the flight to safety, but it's the area that's working. In fact, if energy wasn't working today, then it's just like all bets are off. Utilities are hanging in there relative to everything else. But it's tough. When we prepared for this show, I've done shows with this panel before. You're always looking for breakouts and strength. I'm anticipating breakouts. I'm talking about how it could happen, but I'm not saying, hey, it broke out, let's go full force. I'm a little more tempered in how I look at things right now.
Yeah,
absolutely.
Well, you have to also think about the implication of this energy rally, because essentially, as oil prices and gas prices go up, OPEC cuts back, we're releasing more reserves. There's an actual question about how much more there really is under the ground. That's why the rush to EV is so important. But really, the ramification, again, is the two things that people need more than anything is energy and food. And actually, that is energy for people. And those are the two things that are still well outperforming. So if you look forward, that doesn't necessarily have such a great ending for society at large or the overall market. But as investors, we have to kind of put the blinders on to that and think about these investment opportunities. Again, that's why we've all brought things that I think could actually go counter.
Absolutely.
Higher oil, of course, that's higher inflation, and that's higher interest rates. So lots of trickle-down implications there.
And they can't raise a rate to stop a food shortage or an energy crisis. Enough. I mean, unless they're Volcker and they're going to go to like 20%. That's not going to happen.
Yeah. And the one stock we didn't, LNG, Cheniere Energy, that's another chart that looks fantastic, and it's a hot topic with liquefied natural gas. Sometimes I come on these shows and I'm like, oh, it's too obvious. Everyone's going to pick that one. But that is a spot that looks like it could continue to trend higher going forward. Yeah.
Well, it's certainly no shortage of things to watch in this market, but I want to thank all of you for coming on today, for sharing 5 ideas that have kind of come across your screen, and not just sharing them, but again, really kind of walking us through the logic. Even when we have a market like this where some of those breakouts are failing and we still have to talk about them, it's interesting because we get to talk about risk and reward and all those things. So thank you all. You guys have been watching Jay Woods from Drive Wealth, Mish Schneider from Market Gauge,